Hello, everyone. Um, Welcome to the live stream. So, if you can hear me, please confirm. Great to see everyone. So, give me a few minutes, a few seconds just to share the link with everyone, and then we'll get started. Awesome. Why don't we get started? We have quite a bit of things to cover today. I have to manage multiple screens here, so just making sure I'm on the ball. Hi, Balls Deep. Hi, Styles. Hi, Snorkel. Good to have you guys on today. So, just to make sure that everyone has the link. So we'll give people a few more minutes before we get started here. Okay, it is what it is. This is being recorded, so many will join when needed. I think some people may have had the wrong link when we started. So yeah, let's get started. Many of you have seen the market crash pretty significantly this week. That's it crashing so bad is an understatement. In fact, I think a lot of people saw a lot of their money being wiped out, and they're getting concerned, and that's normal. And I think it's important during this time to try and bring some relief and some perspective to the overall picture of investing and being invested both in the stock market and the crypto market to help people be able to navigate these times. And look, there's nothing new here. This has happened before, and especially in crypto. I mean, 50% correction is in fact a blessing. When you get into the 90%, then you know that you're in crypto. But that being said, before we even get into the factors of why we are crashing, which I won't get too deep into, and how to manage and survive such a crash. The main intent for us today is to be able to share with as many people as possible how to survive or how to actually thrive in such an environment, because it's one thing to to be invested in in the crypto market. It's another thing to be successful when things go down, and things will go down. I don't like to trash on people, but you have many charlatans out there, or sellers of good news, of always good news, I should say, sellers of sunshine, who are always out there preaching, BTC to 1,000, sorry, Ethereum to 10,000, Bitcoin to whatever, 100K or 200K, and so forth. And people trust a lot of what some of those oracles have to say, only to see their life savings go down the drain, and they don't know what to do. So let's address that a little bit. Let's cover how we can be successful, in those markets. So my apologies, I'm managing a lot of screens here. So if you can see my presentation, let me know if you can see it. And we get started. So perfect. So I think I have things set up so that I can see both your questions, your comments, and the presentation. So where are we now? So sharing, I think this one is sharing here. Okay, just making sure. Yes, perfect. So first, let's do a quick update on where Daxe is. So for those who don't know, what is Daxe? So I am the founder of Daxe. So Daxe is a multi-chain certificate of deposit. So essentially, you lock up your asset for a period of time, and the longer you lock up your asset, the more rewards you get. So the more interest you're being paid, and you also benefit on penalties. Very similar to Hex, which is out there, but Daxe is special in the fact that we're the only one who is multi-chain, and right now we're already live on 3 chains. We are live on a Binance Smart Chain, we're live on AVAX, and we're live on Polygon, and we're working very hard to get to Solana. Code in Solana is very different, so it's taking some time, and at the same time, we would like to bring significant changes to how people get the airdrops and how the LP is initialized once we go to Solana and on other future chains. So so we have quite a bit of work to do, and we're working through that. So some of the things we're keeping an eye on is ADA. So there's some more noise reverberating around ADA. So SundaeSwap is now somewhat live, with a few setbacks, but it's good. It's a good news, as it's it was a very much so anticipated DEX for that would bring a lot of new investors and new actors into Cardano, because it brings DeFi to Cardano and makes it possible. So we'll see. More and more, I'm liking Phantom, so it might be one of those chains that we add to the list. It seems to meet our criteria of user growth, asset availability, and asset lookout, total value locked, as it is called. So be on the lookout for that too. Again, because this is the first time, I'm just making sure that everything is working fine, and it looks like it is. So you guys may have seen we're getting more and more coverage too. More and more YouTubers are covering Daxe. That's a good thing. But I'm getting messages also. We're hearing messages also of some of those YouTubers being frowned upon or being shown when they talk about Daxe. I think there's more pain to come, but I don't see that necessarily as a bad thing. You only do that if if you have I'm trying to find kind words, too much of a parti pris in one position or another. So what I call maxis, I think is the right term. So both Bitcoin maxis and funny enough, hex maxis are are either blocking or being very harsh to those who cover Daxe, maybe because they're fearful of what Daxe is and what Daxe is doing. As I said before, there's no need for that. No need to actually be angry. The market space is large enough. But the good thing is that we're getting increased coverage. We're there's more and more noise being made out there. And look, on the whole topic of maxis, it is stupid to actually be close-minded about a technology. I think one should always look for better yield and better opportunities, and innovation is good. And if you talk to the Bitcoin maxis who missed out on multiple opportunities, be it Ethereum or some other technology, Hex or even Solana, well, maybe they made their money. Could you have made more money if you're a little open-minded and continue to evaluate assets that are out there? But I digress. So what are we going to cover today? Well, first of all, today might be a very long one. So there's quite a bit of things to cover because I wanted to bring relief a little bit, to the community around what's happening with the market and how to take advantage of that as opposed to being a victim. So it might be it might end up being a series of videos or series of live stream where we go deeper and deeper into what are some of the proper philosophies of investing and how to position yourself in a way where when such an event happens, you are actually on the winning side rather than the stressed and doomsday scenario side. So, okay. I also encourage you to ask questions. I'll try to scan the chat as much as I can while I do the presentation. So post your questions as we go forward, and don't hesitate to ask. Don't hesitate to share the link with whoever you feel will be able to benefit from this. So let's get started. So who is this for? So this is mainly geared towards very people who are really beginning in investing. So if you're a starter or if you've been investing for a long time and you still think that you're having difficulty finding your strides or difficulty being able to swim in those waters, this is definitely something that will be able to help you. For those who've been investing for a long time or already know what they're doing, maybe you might find some useful information in here, but at least this first episode is really for beginners before we start diving deeper into how to find a proper asset, how to and how to throwing in some trading tools and so forth. It's also for those who although they've been in the market, they've lost a lot, and how to avoid losing when you're in the market, both crypto market and stock market. Today we really straddle around both sides of the border because those principles apply across. They're slightly different for crypto because crypto is a more volatile asset and it's newer, but still it is they both apply. So why is this important? Well, you're either in the investor class or in the asset holding class, or you're in the spender class. And if you're in the spender class, you will notice that your purchasing power over time reduces or is significantly cut. And in fact, one of the most dreadful things for me when it comes to this latest round of economic changes, partly brought upon by the pandemic, but this started well before the pandemic, is the acceleration of inflation. Inflation is an insidious force in many ways. In some ways, it helps the economy especially during hard times, because you provide liquidity, and that liquidity, if distributed well, there's a lot of ifs there. If distributed well, helps the economy, because our economy is based on spending. So as people get more money, they will spend more, and if they spend their money more, usually they spend their money more on things that that help them more. So that will, in some ways, help the economy. However, as you inject liquidity into the economy, and as inflation rises, that means price of goods rises. If wages do not keep up with that rise, what's happening is the worker class, who does not have assets, is hurt the most. So essentially, the purchasing power disappears over time. So that's why it is very, very important for everyone, in fact, to be invested, and to be invested in assets that are going to be winning in the long term, and protect them in the future. So just making sure I'm turning off my notifications here. So what you want to do is select a good asset. Bitcoin has been a great asset. Bitcoin and crypto are by no means the only assets. There's multiple assets. I mean, there's precious metal assets, there's stock assets, bonds, real estate. There are assets out there that not only keep their value over time, but even better, they appreciate over time. So you want to be able to find, well, which one will give me best bang for my buck over the long term. So I think this is a concept that's well understood now. Some people still don't understand how inflation really hurts, but yes, you want to have that in mind. So how do we end up winning in that environment? Well, more and more people are now realizing that they want to be invested, but they don't know what investing really means. In fact, more often than not, when I read messages, or when I speak to people, I find out that those who think they're investors are often speculators or traders, and there's very few investors out there. So we'll cover the differences or the nuances between all of these classes. But I would like to say that there's nothing wrong with either, as long as you know which one you are. Investing is there's a very small subset class of those who actually purchase assets that are actually investors, and a larger class of those who purchase those assets that are actually speculators. The main difference between an investor and a speculator: the investor knows his assets, the speculator doesn't. He's heard about it somewhere, but he hasn't done his homework, so he's just using hope to try and push the asset price up. The investor knows what the price of the asset or the direction of the curve is going to be later. So I see a question in the chat there. How long is this bear market going to last? I'll address that later on. Maybe I should address that right now. Look, if we're talking about the crypto market bear market, crypto market bear market lasts anywhere from 8 months to sometimes 15 months. We've been in this bear market long enough. I think we've been in this bear market since March, April of last year. So that's the positive. People thought that we're actually in a bear market. We haven't passed significantly past peaks of February, March last year. So of Q1 last year. So which means essentially we've been trading sideways. And definition of a bear market is whether or not you've been trading sideways or downwards, for at least 4 periods, and we definitely match that. When are we going to come out of it? I don't know. There's a congruence of factors here. Number one, inflation being high should have helped crypto, but it did the opposite because interest rate hike and reduced liquidity. That means the Fed no longer pumping money into into the economy, which a lot of it actually goes into crypto and stock asset. That has reduced. So in anticipation of that, we're seeing a pretty violent recoil from big money to no longer invest in those risky assets and actually go and purchase things like gold and bonds, and because they feel that the dollar is going to get stronger. Regardless of that, that's beside the point. I'm not an oracle. I'm not a time oracle. I can't tell you exactly when it's going to end. I'm only using past indicators to try and evaluate and judge where we should be going forward. So my recommendation is, as we go through this, you will see that it doesn't really matter when you think the bear market is over. What is important is, if you're an investor, is knowing that we are indeed in a bear market, and what to do in a bear market is, we'll be telling. First, let's cover a few things. What do people feel like when the price goes up, and what do people feel like when the price goes down? What do you feel like when you feel like you've missed huge profits when the price goes up? You feel like, well, hey, I should have bought this and I should have bought that, and look, it went 10,000x or 3x, and I missed it, and darn, I could have been rich. Or when the market crashes, like it has been, a lot of people feel, oh my gosh, I lost all my savings. This is the end of the world. It's going to crash. It's going to go to zero. Many people feel those feelings. You're not alone if you're getting those feelings. This is fairly normal. In fact, it just proves that you're human. But what you want to realize is that in order to be a good investor or trader, not speculator, but investor or trader, you want to be emotionless. You want to assess the market in a way where you have the advantage of distance, and you are able to apply some form of rules and rigor to those rules, regardless of what the market is. So you assess the market conditions, and you look at your assets, and you try to determine what action you're going to take moving forward. So there's a big difference there. So one person is very emotional. I missed the curve. Oh, look, and I bought the top. Or and I bought the bottom and I sold too early. Another person is, this is an opportunity for me to do A, or an opportunity for me to do B. So your psychology and what you have in mind as you are holding or purchasing an asset is very important. Many people actually use feelings to try and push the asset up. I hope that Bitcoin, or I hope that my stock PLTR is going to go to the moon. If you're using hope, well, you can see where hope took you in this last bear market. Stop using hope. What you want to do is you want to have a plan, whether it goes up, whether it stays sideways, or whether it goes down. That way you're prepared regardless of whatever market condition come. And then you are no longer at the mercy of feelings, and your plan will carry you forward. So just making sure that I'm still on. Okay. Please don't hesitate to post questions. I scan them from time to time, and I'll try to break from time to time just to make sure I can answer some key questions there. What does an investor do when the price crashes? The investor sees it as an opportunity, and the speculator sells. It's funny because you will notice that the investor actually tends to do the opposite of what the speculator is doing. So when people are selling en masse, usually they are selling to the investor, because the investor now realizes that the price has dropped to a level that is unusual and sees that as an opportunity for purchasing. So understand the psychology here. One person sees the price dropping and thinks that is the end of the world, and they sell. And who are they selling to? The person who's in the background smiling because they are now buying the asset cheap. You may have been on one side of those equation or one side of that border or not, but what you want to do is you want to change your mindset from that of being of being impacted by the market to that of being a person who takes advantage of market movements. Yes, so Darhouse, superb comment. Getting ahead of the lesson here. Yes, the investor must have a stash of money always on the side, and we'll cover that in order to take advantage of the market. So the problem is that you're too emotional. Yes, in order to win in the market, you should not be emotional. If you stop using emotions, in fact, you'll be more successful. And there's another trick I do is when the market crashes, for example, there's a few tricks you can do. If you can't handle the emotion of watching the price drop to a certain level, then don't watch it. No. Life is pretty large, and the earth is pretty large. Go find some other things to do. Go skiing. That's not for me because maybe I get cold too often, or my fingers freeze too quickly. Go play soccer, or go take your mind off. Do anything that will prevent you from feeling the emotion of what the market has. Second thing I do is, in fact, feed off the negative emotion of the market to your advantage. Usually, when the market becomes overly negative and when the news media becomes overly negative, that's an indicator for the investor that it's now a good time to buy. Keep that in mind, right? So again, when everybody is running out the door, you are actually going in and starting to pick up gems. So I think I had a question in here. So if you see an asset that has this curve pattern, what do you see? Again, the speculator who bought the top feels that this is the end of the world, and then they probably sold halfway through, right? The investor started dollar cost averaging when he hit three quarters of the curve down. So how can you win? What are some of the things you want to do if you're an investor? So I'm throwing very few quick tips here because we don't have enough time to cover everything. We'll go deeper into some of those things in future streams, but the investor wants to understand the asset. So if you purchase something that you haven't researched or that you don't understand, you're a speculator. There's nothing wrong with that. You just need to be honest with yourself that you're speculating. So if you don't have a thesis as to why you're purchasing an asset, then it's more that you're using hope and chance or whatever somebody else said on YouTube or on some other social media to try and hope that you're going to get some whatever X to try and win. Usually doesn't turn up that way. What often happens in investing is we hear about stories that are exceptions, maybe 1% or half of 1% of people who got lucky. And then because we want the reward of that luck, we throw in money into something without totally understanding how this asset is actually going to get us to win in the long term. So you need to understand your asset. You need to spend some time On traditional market, where understanding your asset is, is this company making a profit? Has it making has it been making profit? Over a long period of time, has the profit been growing? What is customer sentiment around this company? Where do I see this company being? In 5, 10 years, or 2 years, for that matter. Which part of the adoption curve are we in? That applies both for stocks and for crypto, and more so for crypto, because what you want to do in crypto, you want to find assets, or you want to find crypto, either tokens or network, who have adoption curves that are growing, or at the beginning of their growth. Hey, if the addressable market out there is, let's say, 3 million people or 3 million wallets, where within those 3 million wallets, in terms of percentage, are we? Are we 0.5%? Are we 1%? Are we 5%? Are we 10%? Are we 25%? And you see that you want to jump on earlier on in order to be able to take advantage of that. A second pro tip is, it's funny because throughout my investor years, I often bought the top of many companies. I often bought the top of companies, years ago, and then held for a very long time. What happens is, whether you buy what you feel is the top or the bottom, that top is only a temporary top. If you have a thesis as to where this asset is going, whether stock or crypto, and you zoom out and you extend it to the time frame to 2 years or 3 years, what you think is the top is what? Okay, well, I bought the top, and it dropped 50%. What is 50% when the asset multiplies itself by 10? If you didn't know what the top was, you don't care. Another thing you want to do is you want to dollar cost average, because if you don't know where within the variations of the curve you are, then put a little bit today, put a little bit next week, put a little bit next month, and then that way you remove the stress. Like, if you have $10,000 to invest and you split that $10,000 into 10 buys, and you split those 10 buys, you spread those 10 buys on a period of 3 months or 4 months, well, if there's a significant crash and the asset drops 90%, with an asset you understand, of course, and you can purchase it 10 times cheaper than what you purchased it before, well, guess who's smiling? If you jump both feet in, you can do that if, for example, there's a significant crash and that is unusual. But if not, just spread your buys, and you're fine. Last thing is always keep a long-term view. I think I already covered that. If you keep a long-term view, then when you see your price drop of 50%, you're not worried. You know it has happened before, and you know where the asset is going. So in some sense, look, everybody and their dog is selling crypto right now. Great, keep selling. Where do you think money is going? Where do you think economic interactions are going to be transacted on 2, 3, 5 years down the road? Are we still going to be on the banking system, or are we going to be on the system that has a public ledger, is cryptographically encoded, which is crypto, and is used all over the world, has a very, very low barrier to entry, which means adoption is easy? I'll let you guess. So if you think that crypto is going to die, then sell. But if you don't think crypto is going to die and is dropping by 30, 40, 50, 60%, and you don't have, number one, the conviction to purchase, that means you are still a speculator. Or you're an investor and you haven't yet realized that you always want to have money on the side for days like this. So Yeah, we covered this. What does the investor do when there's a bear market? You buy, and then you buy, and then you buy some more. You spread your buys because you don't know when the bottom is. Hey, bear market, look, it's crashing. That means it's cheap. If if you purchase hot dogs at $10 every day, and then one day you go out, and suddenly they're selling hot dogs at $2, I'll buy five and then keep them in my freezer. The day it goes back to $10, hey, I'm going to be selling them again. So that's it's as simple as that. That's why you want to have money on the side. So how do you do that? Well, regardless of market conditions, whether it is the best time to be in or the worst time to be in, you always want to have cash on the side. Rule of thumb is between 10 and 40% of your assets should always be liquid. The more the better. And that percentage should be inversely proportional to how high you are on the curve. So that means the higher you are, the higher the price is, the more you want to have asset liquid because then that number one, you've taken a little bit of profit, and number two, if there's a significant crash, you go out. Second, don't buy the bottom all in one go. Those who are out there and think that the technical traders that are out there and think that they can pick up the bottom of a crash just like that, or the top of, I call BS on that. If they know, then that means there's a perfect rule in order to know, which means everybody's going to be doing the same thing, which is the moment everybody starts doing the same thing, it no longer works. So what you do is you essentially average the bottom of the curve by spreading out your buys. Okay, well, I think that it is incredibly low right now, so I'm going to put an additional 5% of my 40%, which was on the side, inside this asset. If it continues to go down, hey, maybe I'll even double that and then put a 10%. But yeah, always have money on the side, and lastly, stay emotionless. Okay, so just making sure that I'm still on stream here. Okay, great. So I think I skipped one there. So how to win in trading? So trading is there's nothing wrong with trading if you know what you're doing, but trading is a very, very different exercise than investing, right? So when you're a trader, volatility is your friend, and you always want to buy low and sell high. There's multiple different ways to trade, and there are multiple different tools out there, but as a general rule for the beginner, you want to be a trader if you know you can win more than 50% of the chance of the time. Why? Well, even if you win 50.01% of the time, over time you're going to be massively rich if you continue repeating that same pattern. So the trader not only wins more than he loses, but also sets up his entry and his exit in a way where the exits providing more returns than when he cuts his losses. So also when you're a trader, because I know a lot of us out there actually think that we're investors, but we have that trader mentality here. When you're a trader, greed is your enemy, or greed is your enemy in multiple ways, even as an investor. But when you're a trader, often you'll find yourself having those thoughts. Oh, look, I made 5%. Look, I feel like it's going to go higher. So no, I'm not going to sell now. So what happens is you're using feelings again as opposed to using your formula in order to win. If you made 5% and your formula was every time I make 5%, I sell, and every time I lose, 1, or 2%, I sell, and you don't follow that, then most often than not, that means you're using hope or you're using feelings in order to trade. You don't want, again, even in trading, you don't want to use emotions. You want to be emotionless. You want to have patterns. Learn to read charts. You want to learn how to read charts. If you're a trader, again, I don't recommend trading for those who it takes a significant amount of time and skill to be able to be good at trading. But if that's something you want to do, you want to learn the skills of the trade, whether it's swing trading, whether it's day trading. So you can use that as a form of, as a way to generate income. But if you're not comfortable with trading yet, don't do it with the majority of your asset. As a rule of thumb, maybe use 5% of your asset, because if the thing is, sometimes we think we get so good at something that we risk it all at once. If indeed your trading skills are so good, if you're the best trader in the world, like you think you are in your mind, then that 5% will very, very quickly outperform your main investing assets. And then you carry on, right? But what you don't want to do is have 95% of your assets in trading while you don't have a good way to trade, and then you keep losing on your trades, and then you keep 5% as as an investor, as your investing pool. So that's not right. So again, psychology and how you approach things is important here. What are some of the tools that are really important for traders? We can't cover them all today. Use options, use limits, use alerts, and above all, use formulas for yourself. What are your targets, and make sure that you keep them realistic. And the last piece is, don't be greedy. If you've made even a little bit on trading, don't hesitate to take profit, and then when the price drops, then you have another opportunity to make another swing. So so what does the trader do in the bear market? He doesn't really care, because usually traders are technical on the chart, so they just watch the chart and try to determine what's a good entry point. So usually they they try to determine, is it still going down? If it's still going down, I don't want to jump in. So and that happens all the time, whether it goes up or down. Also, if you're a trader, it is significantly easier to trade on an asset that continuously goes up. I mean, if you're trading, let's say you're swing trading, and your asset tends to go down, you need to be a very good trader to be able to take advantage of that. But if your asset on average continues to go up, that means even if you fail, the only penalty that you will incur is time. That means, hey, I messed up, and all I have to do is wait. Or even another way to see it is, you're a trader, and because your asset tends to go up, it helps you on that more than 50% win rule that we talked about. So I'm going to pause here just to make sure that there are not too many questions. Investor must have a stack of money. Yes, we are glad to be part of this. Awesome. Glad to see you, Danielo. Did I make the video for you, Dar? Yes, I made the video for everyone that actually can benefit from it. This is starting to get a little on the long side, so we're going to try and power through this for the rest of it, and we'll make some other videos to try and see, try and go deeper into some of those concepts later on. So some recommendations. I strongly recommend those two books. I think it will help you a lot. The Intelligent Investor by Alexander Graham. Funny enough, Alex Graham is is the person from who Warren Buffett learned. There's some very key and important concepts in there that we can't cover them all, especially around asset selection and how to position yourself in the market. How to Make Money in the Stock Market by William O'Neill. That's a good book if you're a trader. So if you want to be a trader, make sure you check out that book. So I'll leave you with those pro tips. So always be learning. I think it's important the most important asset you have is yourself. So keep increasing your sphere of knowledge and you'll do fine. Increase your skill sets and you do fine. And that will help you not just in terms of how you get money, but also how to be marketable for opportunities that are eventually will come down the line. Your investment should always be proportional to the asset risk. I think that makes sense. Don't put your life saving into something that's risky. And if you're a beginner, you want to avoid any sort of leverage and any sort of margin. That's what you want to do is you want to save and be able to use that saving into very reliable asset. And then once you have a cushion, then you can use margin because if things fail, then you can rely on that margin of cash to help you. Saving every day, I think that goes without saying. But in this bear market and in all bear market, perspective is your friend. So zoom out. Lastly, I think it's important to remember that we're part of the lucky ones. If you have money to invest or if you have disposable income, you're lucky, because there are many people out there who don't even have enough to invest or to put into crypto or anything else. Don't let a momentary downturn in the market, paint a very negative picture for you. Even if you had a lot and you lost a lot, well, that's okay. You can always make it back. It just means a little more time. So, thank you all. Hope I addressed some of the questions in the chat. And I hope you all take advantage of this bear market while it's still red. Okay. And I'll talk to you all maybe next week. Okay. Thanks everyone. Bye.